All right, back in the action here once again. It's about that time of day again here, folks. It's Wednesday evening. It's July the 24th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, don't forget, guys, I help traders find high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to identify the best levels of support and resistance, the best setups to watch for tomorrow, and the easiest ways to avoid the most common losses in tomorrow. That's Thursday's trading session. And we have a lot to talk about here tonight. We're going to cover the calendar for tomorrow. Got another batch of earnings reports coming our way. We'll also grab the charts. We got oil, S&P, Nasdaq, gold, and euro on the docket here for tonight's video. I'm going to jump into first at a crude oil. As you may have noticed, crude tumbled off those highs in the wake of that inventory report this afternoon. And I'll bet there are a lot of sellers who are going to be trying to sell this next pullback. But if you look closely at the chart tonight, you'll see this might not be the best place to start selling. Let's jump into that crude chart, that black gold, that Texas T, and let's put this plan together here. Now, of course, looking at the oil chart tonight here, you can see we have that big move down on oil. That's not a huge, right? Not a huge surprise. It's pretty easy to see. Everyone's going to be looking to sell this market. With those bears in full control right now, I'm anticipating that we're going to see a bunch of sellers trying to come in here at the top of this hidden channel. Now, that sounds like a good idea, and I definitely do expect to see some sellers entering in on this area, but I don't see this thing going much further, at least not what we have right now. And here's why. We've got the trading range from yesterday, and where are we? We're right below that trading range. Horrible place to be selling. Also, where are we? Low of that big channel. Horrible place to be selling. Oh, wait, there's one more. Expanding triangle. And I think this is the curveball that we want to lean into. We want to wait on this curveball here, right, tomorrow, looking for that move going right back up, right, to retest the high of what is really an expanding triangle. Now, this is much easier said than done, right? You're probably shaking your head right now going, is this man crazy? He has fallen off his chair a few too many times in that office because it's very bearish, as you can see. So I've got to play it very, very carefully here. We're going to thread the needle. We're going to think like professionals, right, and respect this momentum while looking for that buy now going back up right into that trading range. I'll also talk about what to do if the market continues going lower, right? For all I know, I'm wrong and the market will continue. I'll put that plan together for you guys tonight on this crude as well. Got a lot to talk about on the oil market tonight. Over on the S&P, nice and bullish. We've got two big legs up. We might see a third leg higher here, and I definitely want to try to participate in that third leg higher. Nice, strong, bullish momentum move here on the S&P. I want to buy low. The one thing I don't want to do right now is I don't want to buy high right now, because that high, right, not only is it a measured move, right, but we get a lot of resistance up here that we'll talk a lot more about here tonight on the video. So we know we have that major resistance, and I'm going to stay away from that major area of resistance here. I'm looking to buy a pullback here right now, and I've got three specific patterns excuse me, I'm going to be looking for, right, to buy that pullback. I'll also talk about what if that pullback turns into a reversal and the best ways for us to trade that reversal tomorrow as well as, right, if the market shoots higher, where that next objective will be. So we'll talk buy, we'll also talk sell, and we'll talk about how to avoid some real tricky traps I see happening up around these highs on the Emini S&P. How about the Nasdaq though? Nasdaq, of course, nice and bullish. You can see here on the chart today. Wasn't a very clear day today, as you remember, right? It was pretty choppy, right up around those highs, but they blasted through this afternoon. And you can see here that blast higher, of course, is really falling apart right now and collapsing lower. That's a big, important clue. We know we're bullish right now. We know that momentum tells me I want to be a buyer, and I'll bet there's going to be a lot of buyers that are going to step in here around the low of this channel, right? Not that difficult to find that channel. I'll bet there's going to be a lot of buyers that are going to be trying to coming in to buy that area. But I think this is going to be a bloody mess in here, right? You get the big round number, right? You get the prior high. I'm going to skip that fight. I'm going to look for buy setups using some other levels on the chart, right? For example, right? I'd love to see us, right, bloody up the rookies and give me a chance to buy nice and low. We'll talk about a couple different patterns. I'll look for to buy off of that low. We'll also talk about, right, what if we do chop around and then make a run back higher here, right, like we did earlier in today's trading session. What's the best way for us to capitalize on that move? So I'm going to protect capital. I'm going to save my knuckles, right, and not try to participate in that bloody mess around the 8,000 number. I'm looking for a shot lower. I'm looking for a shot higher, and we'll talk a lot about that tonight on the Nasdaq here. So stay tuned on that. Over on the gold, of course, you can tell gold right now is preparing for battle tomorrow, right? The ECB announcement is tomorrow morning. You can kind of feel gold, right, rationing food, stocking up on non-perishables, right, siphoning gas out of their neighbor's gas tank. You're going to feel gold right now preparing for what might be a choppy session tomorrow morning. I'm kidding around with you, obviously. We've got a range here, right, on the gold, right, range on the gold. Now, this is an interesting range. It's a triangle, and what do triangles tell us? Triangle ranges, they tell us so many great important things. There's one very, very important factor of this range. The size of this range is telling me exactly where to look for the right entries and specifically what type of entries, right? I know that triangles give me a couple key levels to look at, but it's the size of this range that's really the most important clue, and we'll talk about why that size is important and how we're going to use it to be able to avoid some of the easy traps tomorrow morning. We'll also talk about breakouts, right? Tomorrow, of course, ECB. We'll also talk about breakouts here tomorrow as well. What would be enough to qualify a breakout? How do we fade those breakouts? We're going to talk all kinds of range-bound stuff today on the gold chart. And, of course, talking about a range, the euro here continues to kind of wheeze its way sideways here right now. This euro, you can tell something's coming tomorrow because it's been kind of a weird market all week. And of course, you can see we're bearish here on the euro. That bear move down starts going sideways inside of that range. I want to buy low. I want to sell high, right, and avoid that middle. I'm looking for a couple sell patterns to sell off the high. I'm looking for slightly different buy patterns to buy off the low. Why do I choose different buy patterns than sell patterns? Well, we're going to talk a lot about that and the right ways to use it tonight in the video here on the euro. We got a lot to cover here tonight. We got the euro, the gold, the Nasdaq, the S&P, and the crude oil, and we're going to put this plan together here nice and tight for tomorrow, Thursday's session. But before we jump into the video for tonight, I want to remind you guys, make sure you never miss a video. Make sure you join our mailing list. You may not be aware of this, but just before I publish our video on YouTube and upload that to our blog here at sidewaysmarkets.com, I send an email out to everybody on our mailing list because I want to give you guys first crack at watching all this great information, right, and getting those prime setups into the Asian markets. I want to make sure you are first on that email list. You get the first crack at it every evening. And to do that, simply join our mailing list right here on the homepage, and I'll shoot you an email just before this nightly newsletter goes live every evening during the week. Don't forget, all I need is your name, your email address. Hit that subscribe now button. And don't forget, when you subscribe, when you join the mailing list, your job is not over yet. You have to go in, check your email inbox to verify that you got the welcome email. The welcome email is going to have a verification link in there that you have to click on to verify you got the email. And I'm going to fill that email, that welcome email, with lots of great valuable content so you guys can get the most out of our time together every night on this newsletter. So don't delay, pause the video, join the mailing list, and then check your inbox to make sure you get that welcome email. And then every evening, I'll make sure to send you that email once this video goes live. And then before we jump in the video tonight, I need your help, guys. I am always trying to make this place the best place to learn and earn on this newsletter. I'm always trying to improve, and the most effective way for me to improve is to listen to you. I need your help. In the comment section below, if you could go back in time, right? If you could go back in the DeLorean with Marty, if you could go back in time and talk to yourself as a rookie again, what would be some of the words of wisdom that you would tell the rookie version of yourself? Or maybe you are a rookie trader still trying to become confident and consistently profitable. In your eyes, as a rookie trader, as a new trader, what's the most important thing that I can teach you? Is it entries, trade management? Is it mindset? In your opinion, what's the most important obstacle to overcome, right, for you to become consistently profitable? Guys, it means the world to me that you spend a few minutes of your night here tonight. Drop me some comments in the comment section below. What would you go back and tell your rookie version self? And if you are a rookie, in your eyes, what's the most important factor to help you become confident and consistently profitable? Drop those comments in the comment section below. And while you're down there, guys, if you watch this video every night, give me a thumbs up on the video tonight, would you? Give me a thumbs up on YouTube, because you'd be amazed at how far that goes to help me expose this video to other new traders, and you know they can use this help as well, right? Just like you can. So give me a thumbs up on the video tonight, right? Don't be afraid to share this lesson with other trading friends, right? I don't want to hog all the good stuff here to just you and I. And don't forget, if you have any questions, you can always call that toll-free phone number. I'm always here in the office, right? I love talking to you guys. Do not be afraid to call that toll-free phone number if you have any questions about the best brokers, data, charting platforms to use right now, or maybe you want to know more about our free pass to our trade room or our free trading classes. Call that toll-free phone number upper right-hand corner. Use that live support tool when it's back online, right? And I look forward to answering all your questions. But in the meantime, though, let's get to work. Let's get to work. Enough of this chit-chat here, JJ. Tomorrow, of course, is Thursday. It's July the 25th. What do we have here on the schedule here for tomorrow? Well, you know me, I created this little spreadsheet for us here earlier this week. Let's take a look at what's happening here tomorrow. We've had a lot to cover here this week on the newsletter, right? Okay, tomorrow's Thursday. Tomorrow, 8 o'clock Eastern time, we got the ECB announcement, right? So keep that in mind here for tomorrow, 8 o'clock Eastern time, ECB announcement. Keep in mind, we're going to probably start seeing the markets get a bit jittery ahead of that as of about 7:45 tomorrow morning. And then remember, just like an FOMC announcement in the US, the ECB announcement in Europe is going to have the announcement at 8 o'clock, and then it's going to be that press conference until about 9:30, 9:45. So really, this really could say, you know, all the way through about 9:45 a.m. tomorrow. And remember, when we're talking about the ECB announcement, we're thinking gold, we're thinking euro, right? Currencies, of course, that are related to the Eurozone, and obviously gold, right, will be on our radar tomorrow morning. In my experience, whenever you have the ECB announcement, gold and euro will be almost untradeable until about 9:15, 9:30. Now, I hope I'm wrong, but usually the markets on gold and euro, they get all choppy, right, and all crazy there around that 8 o'clock announcement, just like the FOMC announcement here in the U.S. So be careful. I would rather wait to let the dust settle and then trade the response that we see 9:30, 9:45 into that 10 o'clock hour, right? That's a much more reliable way to do it. And then later on in the morning, 8:30 tomorrow morning, right? 8:30, we got a bunch of news here, right, in the U.S. tomorrow, right? We get the international trade, the durable goods, and of course the jobless claims. Now, it's tough to tell. None of those news events really stand out to us. You know, durable goods, international trade, jobless claims, none of those really tell me we're going to see some acute response, right, by these markets, but we'll obviously be there to see how the markets respond as well. And then don't forget, we got earnings season here this week and next, right? We've got earnings from Amazon tomorrow, Google, and Intel. All of those are going to be very, very big market movers for what? The Nasdaq. Absolutely. Now, what I would recommend is go to Nasdaq.com, look up their earnings calendar, and you can see exactly when those earnings are going to be coming out here tomorrow, right? Go to Nasdaq.com, check the earnings calendar, and you'll see all the earnings scheduled for tomorrow, right? 7/25, right? July 25th. So that's the kind of the meat and potatoes tomorrow. ECB, international trade, and of course earnings before the open and after the close tomorrow. watch that Nasdaq. Nasdaq will be affected mostly by those tomorrow. All right, now that we know the basic idea for tomorrow, one more thing I want to give you guys a heads up on. I'm going to be not out of the office next week, but I am working on some brand new stuff for you guys coming into the end of the year. And I'm going to be taking a technology focus week next week to make sure I'm doing some updates on the website, putting together some new course materials for our students, and working on a brand new psychology video series for you guys. I hate to leave you hanging next week, but this time of the year, the summertime season, market's a little bit slower. I like to take these weeks, these big chunks, to get as much productive work done as I can, and that will be next week, right? That'll be July 29th through August the 2nd. So next week, right? Next week, that is July 29th, all the way through August 2nd, right? I will not be sending out the nightly newsletter next week. Believe me, it pains me more than it pains you. I hate to leave you guys hanging, right? But I have to. Every once in a while, I've got to just buckle down, focus. I'm doing some big important updates to the website, working on a new psychology series for you guys, and producing new course content for our clients here at School of Trade. Got to take some breaks every once in a while away from the action so we can reload, right? And then get back at it into the fall season, because the month of August is historically a very, very exciting month, and I don't want you guys to miss a beat of the month of August. So again, heads up, next week, July 29th through Friday, August the 2nd, I will be in the office. I'll be working with my clients, right? But I will not be sending out this nightly newsletter next week here, right? We'll come back and resume on August the 5th, right? That is the Monday following, right, next week. All right, let's get going in this video here tonight. Thank you so much for your understanding here for next week. And by the way, you guys are going to love the new updates I have coming into the fall season here at School of Trade. But first, though, let's get this newsletter handled here tonight. We got crude, S&P, Nasdaq, gold, and euro. Let's start off here first with oil here. And as I mentioned in the introduction, right, oil has this big, strong move down. Now, what does a big, strong move tell us? Anytime we see a strong move in one direction, we're going to probably get that second leg. Now, that second leg, I'm banking on that second leg going to happen, right? I think that second leg's probably going to happen. However, I don't see that second leg going very far here. I see that second leg, right, really stalling out here and giving me a chance to buy this thing back up into that trading range. Because as I mentioned in the introduction, like I said earlier, it's not a very good place to be selling. And I have a feeling we're going to get a little bit bloodied up in this area here. I don't think you're going to get a very easy signal to sell this trade short, right? Or else I'd be talking about selling it and then buying it. And the main reason for that is because we have this trading range. This is one reason why. This range may not be in play here tomorrow. We're going to have to wait and see what happens here. But that trading range, right? What does a range tell me? I want to buy low. I want to sell high, right? I want to buy low and I want to sell high. We are down at those lows right now. Horrible place to be a seller here on the crude oil. We also, of course, can look a little bit further out, right? A little bit further out. We get that channel, right? That wide channel here. We're rotating back and forth, right? I want to buy around the low of that channel. I don't want to be a seller down there. But really the big clue here, the real big clue is right here, this expanding, right, kind of expanding triangle trend line, mark up those lows. Now this trend line, believe it or not, could be actually a little bit steeper, right? It could even be a little bit steeper. It could be like, right, it could be like this. We may even, right, shave off some of that stuff right there. And it could be, right, even tighter here. So this whole area, right, this whole area is potentially here now going to be a support zone on that chart, right? This whole area here is going to be that support zone. So ultimately, bottom line is I'm anticipating that a lot of sellers are going to see that strong move down. They're going to try to sell it, right? And they'll probably get a little bit of it. They might get a lot more than I think. They'll probably get some movement going lower here. I mean, look at how strong that move down was. But at the same time, though, with the low of the channel being below that range, right? And then, of course, what I really love is I love this trend line right here. I think we're going to be seeing this thing into the end of the week here, right? Settling into this big, right, channel here. So we got a great risk-reward ratio on it, great potential. The problem is is it's so darn bearish. That is the big problem right now. So what I'm expecting right now is I'm expecting to see these sellers try a couple times to send this market lower. And what I'd like to do is I'd like to get a good old crown reversal pattern off this low. A crown reversal pattern is a really simple pattern, right? It kind of looks like a crown, right? It's a one leg down, pull back, higher, right? Higher high, higher high, higher low, right? And then lower low, right? So this is what it looks like here, okay? It looks like it's a strong move down. We're going to see a lower, right? A higher low, then that higher high followed by that lower, right? That lower low. Now that lower low usually won't go below the main low, right? So imagine now, strong move down. I've got one low. I want to see higher, second low, and then back up from there. Now you'll notice I don't count this one, right? I don't count that one. That one's not going to be very reliable because it didn't pull back to the moving average, right? The moving average pullback is really the only time I'm going to count what I call a try or an attempt. So again, we had that strong move down. We pull back to the moving average. I've got one seller coming in. I'm looking for two sellers coming in. I'm looking for that trap low, and I'm looking for that buy going right back up into that trading range. The key here, guys, on this pattern is going to be 1, 2. I want to see higher highs right there. That's the key because you want those sellers to be trying to sell the underbelly of this channel, right? You want those sellers to be selling high. And then again, with the proper entry signal on this, we'll look for that, what I call a crown reversal pattern, right? Going back up into that trading range. And obviously, right, you know where my target's going to be, up on the opposite side of that move. Now, what if we don't get the pattern, right? What if I'm wrong about that? Or what if we don't get that pattern? What if this thing just runs lower here now, right? Now what do I do? Well, now what I want to see is I want to see a nested failure pattern. And a nested failure pattern it's very similar to a crown reversal, but the bottom line is anytime we see a strong move in one direction, we're going to probably get that second leg. Now, once they get that second leg, now it's kind of mission accomplished for the sellers. And now what I want to see is I want to see us go back to the moving average, and I want those sellers to try selling this a couple times to kind of tire them out, right? Get them fully committed so I can then buy right into their stops. You got to remember, you don't want to just buy these lows here because a lot of times it'll push right through and stop you out, right? You don't want to buy just at the low, put your stop below that low because momentum is bearish, and a lot of times you'll get stopped out and then price will go higher. So you don't want to try to call the bottom on it. What you want to do is you want to start anticipating, okay, I want to be a buyer. And how do we do that? When the market's bearish, I've got to respect that momentum. Let those bears try to sell it once. Let those bears try to sell it twice. And once I see now, and again, the key here is higher highs, right? Higher highs. You got to remember, sellers want to sell high, buyers want to buy low, right? Sellers want to sell high, buyers want to buy low. So sellers will come in, they'll sell it once, they'll sell it twice, and then again, once we see those bears trying 2 times, now I can be a buyer going back up. So again, 2 basic ideas here. One is the crown reversal. Okay, the crown reversal being the more aggressive of the 2 patterns. It also, of course, has some very specific rules to it, right? And we'll talk about those rules in the trade room tomorrow morning. At the same time, if we do get that second leg lower, then it's the 1, it's the 2, and then up from there, right? If the sellers get what they came for, right? They get that second leg. Now we're just going to look for those sellers to fail off of this low and buy back up. In fact, if we really are lucky with this, we may see it come in for a 1, a 2, and up and over and go, right? We call this a failure into pullback combination. This is a very, very common pattern here. Let them try once, let them try twice. We're buying into those stop losses now. And then, of course, again, right, buying the pullback. The most important thing about buying that pullback, though, will be what? Staying away from that range, right? Staying away from that range because we don't want to trade inside of that trading range. Okay, so those are the 2 main scenarios I'm watching to buy off of this low. If we go back into the range and settle in here, right? If we start going sideways inside that range tomorrow, it is definitely possible. If that happens, now we shift our focus now to buying low and selling high, right? So if we see, by 8 o'clock, 9 o'clock tomorrow morning, we're sitting there just going nowhere, right? Back and forth. We now know we're back in balance. Now look for the 2 try failure pattern. right? Let them go lower once. Try again twice. Buy into their stops, right? Or, again, as long as they sit in this range for a couple hours, we go up, buyers try once, buyers try twice, and we're selling back in. Okay, remember, we're not doing this if the price jumps up, right? If it jumps, I'm not going to try to sell into it. That's not going to be the goal. The goal will be if price jumps up here, I'm going to grab that hidden channel, right, and look for that buy off of that hidden channel, right? Because I'm not going to fight that momentum going back to the top of that triangle, that expanding triangle. But if we sit inside the range, right? If we kind of chill out a little bit inside that range, now the market returns to balance. Now I can watch them go up, hold twice, and sell back right into that trading range. Again, what will happen is the market will go higher, the moving average will come over, the buyers will try to buy into that pullback. The problem is it's not the expanding triangle that we were hoping for. It's just a darn range, and we'll look to sell into that buyer failure. Now, again, if the buyers can hold it, if they get a 1, 2, 3 breakout, then we can go mark up the high, mark up that high, mark up that low, and I can buy that breakout from there. Does that make sense, guys? Right? So if we end up back inside that trading range, everything kind of calms down a little bit, 8:30, 9 o'clock tomorrow morning, we're sitting there inside that range. Okay, trade it like a range. Buy low, sell high, and use, what was the pattern again? A 2-try failure pattern. Now, one more thing I want to mention here, because we talked about this in last night's newsletter, and that is this big move down, because they may, in all reality, right, they may run this thing lower. Right, we may get that run lower, as we talked about in last night's newsletter. We have that, right? We have that big run lower, and so there's a big old bullseye right on that 54.85 area. So the reason why I'm telling you this is because if it shoots lower, be very careful trying to sell it as it goes lower. It's not going to be easy being a seller down here. Okay, you've got all these levels of support we mentioned earlier, and you've got that big objective down to 85. So if we make a run down to 85, unless we stick down here, right? Unless we kind of accumulate, as they say, down around those lows, if we stick down at those lows, it's a range. 1, 2 failure pattern, back down. 1, 2 failure pattern, back down. So for example, if we run down to that range, I'm going to look for that same nested failure, 1, 2, to buy it right back up again. Okay, but if we sit and go sideways, right? If we sit and go sideways, we call that accumulation, okay? They're accumulating more positions, right? The sellers that are selling out, the bears coming right back in and selling more. If we stick down at those lows, that tells me we're accepting that price, and now I want to wait to sell high here. We'll sell up above the top of that range with a buyer failure pattern. 1 try for the buyers, 2 try for the buyers, and we're selling back down from there. So just keep it in mind, if we do make a run lower, that's not your green light to start selling, because as we run lower, we're running right into that low, and honestly, it's going to probably end up right back where we came from eventually here. So watch for that 1, that 2. It's counter to momentum, so you want to make sure those bears try once, try twice, and then you can sell it, right? Because remember, anytime you see a strong move, they're going to try once, they'll try twice. Okay, you got to let them do that before you go looking to buy into it. Same thing, strong move down once, twice, and then back up we go. Or strong move down, we go sideways, settle in, accumulation, 1 try for the buyers, 1 try for the buyers, 2 try for the buyers. It's not a bull market. Most likely the buyers will fail. So we've covered a lot here so far. And if you're here for the first time today, you're probably like, what the hell is all these terms, right? A lot of terminology that you may not have ever heard before. 2-try failures, crown reversals, nested failure patterns, hidden channels, 1, 2, 3 breakouts. Not to worry. I got you covered, right? I'm going to put a link up here in the upper right-hand corner to get access behind the curtain and get access to a free trading course here at schooloftrade.com. If you're brand new to trading, or if you're still not confident and consistently profitable in these markets, I would highly encourage you to take me up on that offer for that free trading class. You'll learn my 3-step strategy You'll also learn my 4 favorite entry patterns. Not to mention, you'll see hundreds of examples of how we use that strategy, right, in our favorite futures markets. So don't forget, grab that link in the upper right-hand corner. I'll also put a big red button. If you're on the blog right now, I'll put a big red button right below this video tonight as well. So make sure you check out the video tonight to register for your free trading class. And please be aware, I'm going to email you access to the free class. That email sometimes gets stuck in your spam filter. So when you register for our free class, make sure you check your inbox. Make sure you use a real email address or you won't be able to get access, right, to that free trading class. And if you have any problems, right, you know where to reach me. Call me in the office. I'm always here to help. Let's keep going. How about some S&P here tonight? S&P is a relatively easy one. The most important thing about the S&P is knowing what I call the market objective, right? The market objective. I remember, boy, I mean, this must have been over a decade ago. I remember when one of my first trading coaches told me, you know, Joe, the markets are always trying to get somewhere, and our job is to participate on the way getting there. You know, some people have said we are just a fly on the back of the elephant, right? The goal is jump on the elephant, right? We're not trying to steer the elephant. We're not the one leading the elephant. The elephant's leading the way. We're going to hop on the back, right? But again, the market's objective. You may not be aware of this, but the markets always have a purpose, right? The markets always have a purpose. And when it's a trending market, the market's objective is for channel rotation, right? It'll rotate back and forth inside of a channel. The objective is to rotate back and forth, and the objective are measured moves. Now, another objective in a trending market is to retest a major extreme, and that's exactly where we are right now. We had that big high from earlier on in the month of July. Deep pull back, and we are right there, right just moments away from reaching the market's objective. So the markets are always trying to get somewhere, and my job is to anticipate where that somewhere is and try to participate right on the way to getting there. And I know right now that we're sitting at one objective, 2 objectives, and pretty much 3 objectives right now. Top of the channel is 1, measured move is 2, and a retest of the high. The buyers on the S&P were trying to get somewhere, and they got what they were trying to get, right? They got where they're trying to go. Now I have to be patient. I've got to wait for some opportunity here to find a risk small, earn large setup. See, if I buy right here now, I'm buying right into major resistance. I can't risk small to earn large at this high. There's no telling how much further this market will go, right? There's no way for me to tell if it'll break through these highs or not. So I have to be careful buying high right now until I see more proof. The moral of the story is we know we're bullish. We know we're right at a couple levels of resistance. We're right at what I call the market's objective. We don't want to get on, right? We don't want to get in when we're already at the objective. We want to wait and pull back here and buy at a lower price. That way we can get back into the trade while we go up to the next objective from there. What do we know right now? We know we are bullish, right? We know we're sitting at resistance. In a bull market, I want to find levels of support. To be a buyer, mark up those highs, bring it down to that low. That creates a bull channel, right? That creates a bull channel. That's a great level of support. What else do we know? Strong move up, pull back, strong move up. That is a great level of support at that 12 half area. That's going to be a great level of support, and that will help me create what I call the battle zone. So we know we're bullish, we know we have a lot of resistance overhead, and we know we have quite a bit of support waiting down below. The key right now is I've got to get deep enough off of these highs so I'm not buying directly into that high. I don't think we're going to get a very easy setup just off the low of this channel, right? Off the low of that channel is not going to be a very easy setup to buy on it. So what I want to do is I want to get a pullback, hopefully down in that battle zone. And if we do get that pullback, what's going to happen is that moving average will come over. The sellers now will think this market's reversing, and they'll try to sell the pullback off that moving average. You know, believe it or not, there are a lot of traders out there that still trade these moving average cross strategies. So for example, right, if you Imagine now, right? Imagine now a moving average cross, right? Where moving average cross is here. A lot of people still trade these strategies where they'll try to sell that pullback after a moving average cross. The problem is it's not a bear market. It's a bull market. Those moving average cross strategies, they will work in certain conditions, but this is definitely not one of the reliable ways to use a moving average cross. I'm anticipating a lot of rookies, and we talked about this last night, thinking like a rookie, right? I'm anticipating here that as this market makes a pullback off that high, because nobody's going to want to buy into that area of resistance, I'm anticipating now that moving average comes over. I'm anticipating there'll be this cross, right, of two major moving averages. Sellers will try to sell that pullback off the moving average. It's counter to momentum. Remember, the market's trying to get somewhere. There's momentum in this market. The last thing I want to do is go against that direction. So what I'll do now is I'll think about now, if I was a rookie, where would my stop be? And that's exactly where I want to be buying. I want to be buying because the market's bullish. I'm waiting for those rookie sellers to try to short this thing for whatever reason, right? I'm sure there's some resistance up here. They're trying to sell off the high here, right? Doesn't matter. It's not a bear market. I'm looking to buy into those stop losses of those rookies. I'm then looking to buy that pullback. And you'll notice all of these now are giving me the ability to buy at support, not buy at resistance. And I can take a small amount of risk for a much bigger reward, because what does that do? That increases my odds of success. So now we know I want to get the pullback, right? Get that pullback, get that failure into pullback, and then back up we go. Now, it might get nasty. We may see a real sharp move lower. We've had a lot of sharp moves lately. If we see a sharp move lower, can I still buy this? You can, but if the pullback's extra zippy on the way down, what you want to wait for is that nested, that 1, that 2, and again, it'll look very similar. 1, 2, up and go, right? Now in this case, let the bears try once, let the bears try twice, and again, we know where their stops are. We're buying into those stop losses and then buying that pullback on the way back up. So two basic scenarios. One is the shallow pullback, right? Shallow pullback is that failure into pullback combination pattern, which you'll learn a lot more about in that free trading course. Or strong pullback, right? Strong pullback. Market feels very bearish. Give those bears once, give them twice, and then buy into their failure. Retest of the high is that target. And if we do get that pullback, right? Mark up the measured moves, 1, 2, and there's where your target's going to be, right? These will be symmetrical targets here. What I'll do tomorrow is, right, take some profit off at the high and then leave that runner for, again, I'm just drawing this up right now, for that next measured leg going higher. Does that make sense, guys? All right, so that's the plan to buy this thing as it pulls back. Now, what if it pulls back? How does it turn bearish? How does this market turn bearish? And we already know what happens when a bull market pulls back, right? It pulls back, they try to sell off the moving average, they fail, and market runs higher. We don't want to make that mistake and try to sell into that pullback. So what does a reversal look like? First, strong move down. Strong moves are not enough though. Next, pull back to the moving average. Third step, strong move off the moving average. We call this what? A 1, 2, 3 reversal. Okay, pretty simple, right? It's 1, strong move down. 2, pull back to the moving average. 3, explosiveness off the moving average, right? This reversal pattern is all about the strength of leg number 3, okay? It doesn't matter how strong leg number 1 is. Okay, leg number 1, I want it to be strong, but really all that matters here is show me some zip coming off that moving average. That will tell me, most importantly, the buyers have given up on this market, and this is now a bear market. Now, what do? Do we chase it down here? No, we don't sell low. You're professional now. We sell high at resistance. Mark up that low. Mark up that low. Up to the high of that move. That will create the hidden channel, and we sell the hidden channel pullback from there, right? That hidden channel pullback. Where's my target going to be on that? The round number, 3,000, should be an easy target for those sellers tomorrow, right? Which is also top of that major trading range. Now, also keep in mind with the news tomorrow morning, keep your eyes open for a possible range up here. If we do start going sideways with a range, what's the best way to do it? 2 try failure pattern, 1 try for the bears, 2 try for the bears. We're buying right up into those stop losses, right back up as we go. What if I'm wrong? What if I'm wrong, right? What if someone comes out overnight and the market takes off to the upside? If the market runs higher through these highs, look for a spike in channel. 1, 2, 3, mark up that new high, mark up that low, and we're buying off that low. Where to? The next measured move. Again, 1, 2, 3, right? Figure those measured moves out from there, right? So we know if it was a takeoff right now, right? If it takes off right now, right? That's where the next measured move will be, up at that 30.34. That seems to be pretty lofty here, but hey, this is the Emini we're talking about. So again, 1, 2, 3, show me some proof, mark up the high, mark up that low, we're buying off that low, and that's where our objective is now, right? The market's always trying to get somewhere. In a trending market, they're trying to get those measured moves. They're trying to get channel rotations. All right, guys, good stuff here on the S&P. Now we know both up, down, and sideways. Let's grab that Nasdaq, shall we? Now the Nasdaq looks a little bit tough here for tomorrow. Right? At first glance, it looks pretty easy. You know, at first glance, you're like, oh, shoot, this is easy, right? 1, 2, 3, mark up these highs. It's a bull market, right? Just find that low, and we'll just might as well just give me the money now, right? Save us all the time. Right? Buy the low of that. Here's the problem, though. Look where the low of that channel is. It's right at the big round number, but more importantly, where is it? It's right at that prior high. Now, hey, this may act as support, right? I'm sure some of you guys are saying, well, no, bro, this is like, reversal line support. We're going to buy off that level. It might be. It definitely might be. But I'm sure I don't trust that. I don't trust that at all. Right? If you want my opinion right now, this looks like this market is going to be duking it out there around that 8,000. So I'm sure there are going to be buyers here. I'm sure there will be buyers who will see this and go up, back, and they'll try to buy this stuff right now. But honestly, I think this is going to get ugly. I think it's going to get pretty ugly here as we pull back into this area here. And there's a couple of reasons why. One is the round number. The other is that major high at 79.97. But, look at the strength of this move, right? Look at the strength of that move down. Anytime we see a strong move in one direction, what do we expect? We expect to see another leg, right? We had a very similar situation in last night's newsletter, right? Strong move down, expect a second leg. So this is something I'm looking for here tomorrow as well, right? What I'm really expecting here, though, on this Nasdaq is I'm expecting this to get a little bit bloody here around that area, right? I would expect here right now for buyers try to buy it, get them stopped out, sellers try to sell it, get them stopped out. I'm expecting this to get a little bit nasty, right, around that 8,000. And one of the things I always tell my clients is there's nothing wrong with letting somebody else, dig that hole for you, right? And then wait. Literally wait. For example, after the bloodshed right around that big round number, up, pull back, and go. Much easier. Yeah, I might not get into the very low of that move, but it's going to be difficult to get into the very low of that move. Or maybe it drops for us, right? We drop it, right? We shoot lower. Perfect. Now I can look for that failure and back up from there. So I'm really anticipating this to get a little bit ugly around that 8,000. Now it might be a full-blown range, right? So if we do see this thing settle into a range, right? If we get the benefit of a trading range, that will be great, because then I can take the size of that range, and use that to create my buy zone down here. I can also use that to create a sell zone overhead. What I need is the buy zone. Okay, so imagine now the market goes sideways, we get that range we need. Now what I'll do is I'll wait for the market to shoot lower. I'll wait for those sellers to try to sell that market going lower, right? At that point, it will not be a bear market yet at that point, right? Because why? We will not have seen a 1, 2, 3 reversal like we just talked about in the S&P. I'm going to let that, let's do this. Let's go like this. Much easier, right? So there's my range, right? We go sideways inside the range now. Let it go shoot lower, right? Let it go lower. Moving average comes over. Let them try to sell off that moving average. If they're successful, it's a reversal, right? If they're successful, it's a 1, 2, 3 reversal, and we're selling off of that high. Where's my target? You got it, back down to retest that low. If they cannot, though, right? If they don't jump, right? If they don't jump off that moving average, remember that there's got to be some vigor coming off that moving average. If they don't get it, now we know where stops are, and we're buying right into those stop losses back up into that trading range. Or maybe it gets right, or maybe it gets sucked into a range here, right? Maybe we suck into this range here right now and make a shot higher. Now, I'm not going to buy the breakout because in liquid markets, breakouts don't work very well. What I will do, though, is I'll look for that. There's two types of breakout patterns I'm looking for. One would be a two-try breakout, strong move up, one try for the bears, two try for the bears, buying into the two tries, right? You'll notice I use the number 2 a lot because the markets are, well, they were traded by humans, and human beings are creatures of habit. Most people will try things twice, and then if they don't succeed, they'll give up, right? Think about it. When was the last time somebody you know tried something 3 times? Most people try once. Oh, I didn't get it. Let me give it a try again. Oh, no, didn't get it. Okay, I'm done, and they'll give up, right? In trading, that personality is everywhere in these financial markets if you know what you're looking for. So when we go higher here, I'm expecting bears to try once. I'll expect them to try twice, and really all I'm trying to do is I'm trying to find a way to buy low, right? That's the real reason why I want to use that. I'm trying to find a way to buy low. I don't want to buy high. If you buy high, you put yourself in a position where you have to use a big stop. You do, right? If you buy high, you're susceptible to any little pullback to stop you out. So you wait for that pullback. In this case, it's a 2-try breakout pattern, strong breakout. Bears try once, bears try twice. Remember, higher highs, because why? Bears want to sell high. And, of course, we're buying on the way up to that next measured move, right? 1 leg, 2 leg, 3 leg, up to that next measured move target overhead. Or, nope, ran out of time there. Or we go into that range and we 1, 2, 3 breakout, mark up the high, mark up that low, and we're buying off of that one. These are very similar, but they are quite different, right? They are quite different. One is that strong move up, 1, 2, go. The other is the other one's got a more lazy feel to it. It'd be a move up, pull back, and then jump. That tells you we're good. Mark up the high, mark up that high, and we're buying off of that low. All right, guys? So now we know what to look for here. We're looking for a pullback. You know, and again, maybe I miss it, right? Maybe I missed the failure. If you want to be aggressive on this, it'd be a failure into a pullback combination, right? Price goes lower. Bears to sell off the moving average. We know where their stops are. We're buying into that failure, right? Then buying the pullback. That's called a failure setup into a pullback setup. And then, of course, from there, I would mark up that high, mark up that low, look for a trap low, right, and finish off that move as we go back up to retest that high. But again, I just don't think it's gonna be that clean. I don't think it'll be that clean in that area. I think there's gonna be a bloody mess around that 8,000 tomorrow morning. And I'm gonna wait for that. I'm gonna wait for the rumble to start up, and then look for ways I can pick the edges, right, to make money there tomorrow morning. The Nasdaq looking good. How about some gold here? How about some gold? So gold's going to be tricky tomorrow. First things first, we know we have ECB tomorrow morning. So be careful overnight. I will admit, the last couple ECB announcements, gold's been pretty good in the pre-market, you know, before 8 o'clock Eastern time. Don't bank on that. And this is where you've got to be, you got to be, be disciplined, be patient, be conservative. If gold's not moving much overnight, don't force it. You know what they're waiting on. You know, but if you're seeing good momentum, seeing good movement, seeing good liquidity, you know, and again, we'll talk more about that tomorrow in our trade room, what that all means. But, you know, if the market's not moving much overnight, don't force it. They're waiting for the ECB announcement at 8 o'clock Eastern time. And again, after the news comes out tomorrow at 8 o'clock, it's not just 8 o'clock and then we're done. Remember, it's that whole press conference crap, right? You got to listen to the press conference, and that will usually have these markets really going kind of bonkers, right, after that news is released and they start taking live Q&A. So be careful tomorrow on gold before the news comes out, and especially after that news is released tomorrow morning as well. So knowing that, right, knowing that we're really kind of at the mercy of Draghi and the ECB announcement tomorrow, the main structure here right now is a triangle. Now, triangles are are pretty simple. They are range-bound markets, and range-bound markets tell us we want to buy low, we want to sell high, and we want to avoid the middle. And the best types of setups you want to look for on range-bound markets are failure setups. In other words, you want to wait for a time where the sellers try to take it lower, get those sellers to try to sell the pullback and buy into their failure. Okay, this is another example of number 2, right? Strong move down, the bears will try again. That's 1 try, 2 try, and then back up into that trading range. The other would be the case on the upside, right? We go up, strong move up, the buyers will try to buy that pullback. They're trying to break out of this range at that point, but again, it's a range. Ranges are balanced, and the market will almost always go right back down into that trading range. And again, it's a failure pattern are going to be the best setups on range-bound markets. Now, some dynamics about a triangle. Triangles are a little bit different than your normal range because the most important levels on triangles are around the edges, right? They're around the edges, right? So as the triangle is forming, these levels, right? These levels are really the most important levels that we want to use. We want to sell off these highs and buy off of these lows. Now, knowing that, one thing that stands out on this chart is the fact that this is a very wide trading range. In fact, as I'm watching this thing go higher here right now, I'm thinking this range might be a little bit, yep, it's probably a little bit tighter here. Let's adjust this now. Live on the video here. Let's do a little adjustment there. Okay, so it looks like now, it honestly looks like that's going to be your trading range as we see more information here, right, in this session. Let's mark this one up now, right? So now we have more to work with now, right? Now we got a lot more to work with. I'm also now going to take this, put this up here, and bring this up to my perfect. That becomes now that new hidden channel. So a little bit, right? A little bit of an adjustment there. Okay, so now that we have that now we know range top, range bottom. There's my important edges. Look for failures around those edges. Okay, what I'm looking for is stay away from that middle, right? Stay away from that middle. I want to see the price sort of go lower, right? Try to get it going lower. Get that moving average coming down. Get those bears to try to sell off that moving average. Now you know where stops are. We're buying into stops and, of course, buying that pullback as we go. Or, right, we go higher. Again, you're watching these major swings up here, right? We go higher. Price pushes up. The buyers, of course, now think this is a breakout. Let them try to buy that pullback so we can sell it back down into that trading range. Stay away from the middle. Buy low. Sell high. Now, what does a breakout look like? Breakout definitely could happen tomorrow. Breakouts are possible because of what? The ECB announcement. Breakout. What's a breakout look like here? A breakout is the same pattern we talked before. 1, 2, 3. 1, 2, 3. Right? Strong move up, pull back to the moving average. And remember, the key to a good breakout is not the original move out. Okay? That's pretty much irrelevant. It's how the market responds to the moving average. Right? It's how the market responds to the moving average. Right? Oftentimes, markets will go up. They'll pull back to the moving average and collapse back down in. They'll go up. They'll pull back to the moving average and then collapse back down in, right? They'll go down, they'll pull back to the moving average and they won't hold and they'll get sucked back in. They'll go down, they'll pull back to the moving average. You get the point, right? You get the point. So in a balanced market, you know, we talked about market's objective earlier. The market's objective in a balanced market is to go back into balance. In a trending environment, the market's objective is to get your measured moves, to get your channels, right? To retest the high, to retest the low. Trending markets are on a mission to get somewhere. Range-bound markets, they get their feet kicked up on the couch, for crying out loud. A Corona, right? They're happy campers, right? They're here, okay? They're content where they are. And so by understanding that dynamic, we know we have the center of that range. Price goes up. It's how they respond to that moving average. Right? It's a strong move up here. Good for them. But can you hold that pullback? If you can, right, if you can show me some punch, okay, now I can take you seriously. Now mark up that high, mark up that high, mark that low, right? And there's your sweet spot now. looking for that pullback here, right, up on gold. And then from there, right, I mean, there is so much potential back to the upside on this one, right? If they can break out higher here, there's a ton of potential here. Now, obviously 14.54, it's not out of the picture. What is that, 30 points pretty much? Yeah, that's a pretty big move in one day. They did it earlier not this week, but last week, right? They did something similar, right, earlier in the month. So it's not impossible, but it's not likely to go all the way to that top. So we'll definitely be keeping our eyes on that for a run higher here tomorrow. And then on the way down, right, where's the objective going lower? The objective going lower is right down around these lows, right? That 1405. So if we see that strong 1, 2, 3 breakdown, marking that low, marking that high, and we're trying to sell off of that high here. Okay, I get it. Trading breakouts are difficult. You got to wait patiently for them. Right, but please don't think like a rookie right now and try trading breakouts here, right? It's not enough to see some previous examples work. Most breakouts in liquid markets will fail. We are probably going to get a breakout tomorrow at some point because of Draghi at 8 o'clock, but who knows when? And who knows which one will break out. It's very difficult to pick which breakouts will work. I've tried every single filter on the planet, and I always keep going back to wait for the breakout confirmation. All right, guys, so gold, careful before, really careful after that news tomorrow. Watch those breakouts, but fade those breakouts back into balance right before we get there. Next up, how about some euro here? Wrapping up tonight on that euro. Like I mentioned earlier, euro has definitely been a little bit gassed in today's trading session. We had that kind of low volume roll lower down to that big round number, right? As I mentioned earlier, right? It kind of feels like the euro has kind of battened down the hatches, right? They're boarding up all the windows right now. They're storing all their canned goods, and they're getting ready for, right, the storm, the Hurricane Draghi to come through tomorrow morning. We know we're bearish. We know we're into a trading range. This is another range-bound market. This is not a triangle. This is actually a rectangle range. Rectangle ranges are a little bit different than triangles because you'll take that rectangle, the size of that rectangle tells you where my sell zone is. The size of that rectangle tells me where my buy zone is. Okay, so ranges are very, very helpful when it comes to finding good levels of support and resistance. In fact, the amount below that range from earlier on in the session can be used as what I call the pendulum swing. Right? If markets are balanced, as we said earlier, if a range-bound market is balanced, then when the market goes lower and that momentum swings, it's not going to stop just back in the range. It'll usually carry over up to the opposite side of that swing, right? Think of this almost like a measured move below the range, above the range. And again, we call this the pendulum swing. Right? Again, it's a range-bound market, so it's balanced, right? The market's objective is to go up and back in, go down and back in. The only real difference here is momentum. Momentum is overall bearish right now. So I can be more aggressive being a seller than I can being a buyer. For example, as the market tries to go higher here, I've got all of these bears that are waiting for the pullback. Everybody's got to be waiting for that pullback right now. Hadn't pulled back in 2.5 days. Right? A lot of sellers, I'm assuming, waiting for that area here to sell. The problem is if we get that run higher, right, buyers are what? Yeah, buyers are going to come in and they're going to try to buy that pullback. So I can't just sell it as it goes higher and put my stop right above that high because a lot of times the buyers will come in, they'll poke me out of that trade and then run it back down again. Right? It happens a lot. Okay, so you don't want to just sell it as it goes higher. As it goes higher, let those buyers, right? Let those buyers wrap that rope right around their neck, right? Let them buy that pullback. Understand where their stops are. It's a balanced market. They're going to try to go back into that range again. We know where the stops are now, and we can sell into those stops. We can sell that pullback as long as we're what? As long as we are avoiding the middle of that range. The failure pattern is very, very common. The pullback pattern may not qualify because it may be inside the range, right? So just be aware of that as we sell. Now, how about the flip side, right? We make a run going lower. Can I use that same failure into pullback combination? No, I can't. Why not? Momentum. Momentum is the key. Momentum is one of the things that took me way too long to learn. You know, momentum and volatility. Momentum and volatility are two things that, I talked about this earlier. If I could go back in time and kind of shake the younger version of myself and say, hey, pay attention to this. It's important. It would be short-term momentum and understand how to read the market's volatility. Because the market's volatility tells you how big your stop needs to be, how big your targets need to be, right? You don't want to apply the same 15-tick stop every single day because the market's not the same every day, right? We'll talk more about volatility and how we use it in that free course. We'll also talk about short-term momentum. Momentum is bearish as we go lower here. It's bearish overall. Because of that momentum, I need to give those sellers a little bit more, what's the word? Time, right? Look back here, right? We go down, what happens? We go one try. We go two try, buy back up, right? You'll see it. Strong move down, pull back to the moving average, right? One try, two try. Remember, higher highs here, higher highs, then back up, right? Then back up. Now, sometimes these moves, they go down and they shoot right back higher, right? They shoot right back higher. If that's the case, wait for a trap. Wait for a trap. That'll work too. That qualifies as one. That qualifies as two. Trap low. That's one of my favorites. We don't get it every time, but that would definitely be something to watch for, right? So it could easily be, it could be a 1-2, right? It could be a 1-2 and up, or it could be a little more aggressive. One up and then trap low. You'll be amazed how many times that pattern sets up. Not as often as I'd like it to, okay, but pretty often though. So now we kind of know what the buy side looks like and the sell side. Again, be very careful overnight with the ECB announcement tomorrow. Don't force it in the middle. Buy low, sell high, and what's the breakout look like? 1, 2, 3 breakout. You got it. Mark the high, mark that low, and we're buying up from there. Right? Much like gold, the euro has a ton of room to run. 13,000, the big round number, right, comes to mind up front. And then, of course, as we go lower, 1, 2, 3, as we try to make this move lower, there's nothing down here. Nothing. Nothing. There's nothing down here, right? And next stop is 1,000 on that euro. So we'll have to wait and see what we get here as far as structure. But 1, 2, 3 breakout. Mark that low, mark that high. We're selling off of that high. And again, you want to find that sweet spot right around those two. And then again, we'll use the size of these legs to qualify that for the target, right? We'll use that measured move target on that breakout. Boy, what a great lesson tonight. Hope you learned a ton on tonight's video. Euro, gold, Nasdaq, S&P, crude oil. Careful on that gold and euro tomorrow morning, again, because of that ECB announcement. And speaking of tomorrow morning, what's stopping you? Come out and trade it with me tomorrow. 8 o'clock Eastern time, we open up our trade room every morning, Monday through Friday, with all of our best clients, and we trade this 3-step strategy together. You know, guys, the strategy is pretty simple. You know, in theory, trading is pretty easy, right? Buy low, sell high, risk small, earn large. But for some reason, I know I had a horrible time with this. It's difficult to do it on a moving market. When there's risk and there's fear, it's not as easy as the books on Amazon make it sound like, right? And that's why our trade room is such a great advantage for anyone who's not yet confident and consistently profitable. Come out and join me tomorrow morning. Let's do it together in our trade room. Look over my shoulder, right? Trade the patterns with me. It's really the best advantage you can get as a new trader. And to get started, grab the advanced course. Our advanced course includes our beginner, our intermediate, and all of our advanced video classes, hundreds of hours of learning lessons inside the member section of the website. We also have a trade room opening every morning at 8 o'clock Eastern time, ongoing support, all the indicators, all the ongoing support that you need. You can learn more on our website here at schooloftrade.com, or pick up the phone, give me a call in the office, and I'll go over all the details with you as well. Also, please be aware too, if you're not ready yet to be a client, that's great. How about that free trial? The free trial is the best in the business. I'm a little bit biased, as you can imagine, right? That free trial comes with a free pass to attend our trade room, our free trading course, right, with all those setups and all the 3-step strategy, and of course, hundreds of examples, right, of how we apply that strategy to our favorite futures markets. Grab that free trial, grab the advanced classes, and I'll see you guys tomorrow morning in the trade room. If not, tomorrow night, we'll do it again tomorrow night, same time, same place, Tomorrow, next edition of our nightly newsletter. And again, next week, no newsletter next week, but back here the first full week of the month of August. Guys, thank you so much for being here. It means the world to me that you spend this hour and 15 every night with me on the newsletter. Thank you so much for joining our mailing list, hitting that thumbs up on YouTube, and we'll see you guys in tomorrow night's video. My name is Joseph. Remember, right? Be well out there, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.